All right, let's take a look at tech today. This is the NASDAQ composite. Um, we've got a breakout above this top, and we're getting follow through. It looks to me like the NASDAQ is heading towards 16,000. From my last video, I said if we don't get some churning around this breakout, if we just make a beeline to 16,000, in my opinion, that would be a fairly positive sign that maybe we are starting that final parabolic bubble phase. I got people in back here at the bottom of the ICL. I've consistently watched as people try and fight the rally. This happens at every intermediate cycle low. The bears start to get overconfident as price moves down into an intermediate cycle low. They're calling tops. They're looking for the end of the bull market. And then, pretty soon everybody starts to get that mentality. And then when the intermediate cycle bottoms and the longer term cyclical and secular trend resumes, they try and fight the trend. So what happens is people either they hold on to their shorts way too long, or if they're long, they take profits way too quickly. During the first daily cycle, there are going to be down days, but the risk is that something like this happens where price just churns higher day after day. And if you're still in this mentality, expecting price to turn and go back down, or you're just expecting a very choppy move. So very often what I see is after a pretty good move, people will take profits and then say, I'm gonna re-enter on a pullback. Well, the big risk, of course, and that's what's happened here, is there is no pullback, and so you exit, and then you sit on the sidelines as you watch price run away from you. So that's what has happened to a lot of people. Back in here, it happens at every intermediate cycle low as you come out of that low. First daily cycles are not really great times to be trying to finesse wiggles back and forth in the market. Just accept that there's going to be some down days. You're probably not going to be able to time them correctly, and just hang on for the ride until we get late in the daily cycle, which generally is like 30 days, and we're only, I think, day 20 today, or 21, something like that. So we've probably got another couple of weeks before I would start to look for some kind of a pullback. And the RSI is embedding in the overbought condition. That's a sign that we're in the advancing phase of an intermediate cycle. There's no question at this point that we are still very young, only on week 4, I believe. As I've said before, in bull markets, the advancing phase of the intermediate cycle can run 15 or 20 weeks. So it's still very early in this intermediate cycle. And then here's the other thing that happens when people take their profits. They've got a little profit and they want to lock it up because they've still got the memory of this, the recent memory of the ICL. They're worried about price turning back down, or a 2 or 3 day correction. They think they're going to time it perfectly, and they get out. And then the problem is, even if they do time it perfectly, how do you know whether the pullback is going to last 1 day, or 2 days, or 3 days? You don't. And so here, if you manage to time this top pretty good, which I saw a few people did, and then they said they were going to get out and wait for a pullback. Well, the pullback lasted 1 day, and how do you know in advance that you got to buy on that very tiny little pullback on day 1? You don't. So you end up what ends up happening is, after you get 1 day, then your mind says, well, it's probably going to pull back again, and then when it doesn't, you get left behind. So trying to time these wiggles in the first daily cycle is almost impossible, and it almost always just ends up costing costing you money. The first daily cycle, you probably should just accept that there's going to be some down days along the way, and forget about trying to time them. You more often than not, you won't time the tops correctly, and then even if you do, you're not going to be able to time the re-entry correctly, whether it'll be 1 day, 2 days. If it's 3 days, then it's gonna look like the trend is reversing and rolling over, so you won't be able to pull the trigger on a 3-day drop anyway. So I've begged and coerced and beaten people over the head to try and get them into the areas that are still going up. uh, Stocks are still going up. Whether or not you believe the fundamentals warrant this, it doesn't matter. People are being rewarded for being long stocks. So as long as they keep being rewarded for it, doesn't really matter what the fundamentals are, they're going to make money. The fundamentals were deteriorating in early 2000, but stocks kept going up. The fundamentals for oil had already completely collapsed in early 2008, but price kept going up. These parabolic moves have nothing to do with fundamentals. They have to do with human emotions and sentiment. And as long as you keep getting rewarded for buying dips, then traders are going to keep doing it. So trying to rationalize why you don't want to be long stocks because of some fundamental reason doesn't really matter until the top comes. So stocks are still going up. So you want to be playing this sector long. Energy is still going up. You want to be playing this sector long. I kind of get the sense that maybe we're going to form some kind of a sideways consolidation here for maybe another week or so in oil, maybe one of these triangle consolidations or something. But I think you're probably getting an opportunity here in oil soon because there's going to be a breakout and a move to higher highs. But I don't think you have to panic into the market just yet. At best, we're probably going to go sideways, and at worst, we may have another uh, move down that's a little bit lower than this one. We may get one of these ABC type corrections. I'm not sure, but I don't think we're ready to break out above this resistance just yet. So you don't have to be in a big rush to panic into energy at this moment. Gold, on the other hand, and the gold bugs are the worst offenders for this. They try to justify um, only valid trades occurring in the precious metal sector. They want to pick a top in stocks, and the metals are still going down. There's no higher highs in here yet, and the GDX mining index is now trying to break below this major support here again. So you want to give this a rest for now and focus on the two areas that are still in uptrends, and that would be stocks and energy.